Hey Bowtie Nation, Joseph Hogue here with what could be the biggest secret in the market right now. This is a market worth $462 billion a year that nobody is talking about, and I found 5 stocks in the center of it with 20% upside to analyst targets. In fact, these 5 stocks were some of the worst performing in the market over the last year, and the one with the biggest loss, is one I just bought $85,000 in shares. I'm going to explain the massive potential in Medicare stocks, why it's changing, and when this could happen. I'll then reveal those 5 stocks to buy before the 2025 changes, and the one I just loaded up on last week. We usually get right into those stocks to watch, but here we first need to understand exactly what is happening to Medicare Advantage and why it could be the biggest surprise to the market next year. Medicare is the government's health insurance program for people 65 and older, and it's one of the biggest chunks of federal spending, an $848 billion budget in 2023, which means it is a full 14% of total government spending alone. But the problem is, because of government inefficiencies, healthcare costs, and just an aging population, Medicare spending is estimated to grow at a 5.6% pace over the next decade. That is more than twice the pace of overall economic growth, and it is unsustainable. And one solution to this is the Medicare Advantage program, a program offered by private insurance companies approved by the government and required to provide the same coverage as that traditional Medicare plan. And here, because the insurance companies are better able to negotiate costs with their network providers, premiums paid by seniors are lower than with regular Medicare. And because of that, it is hugely popular, with 54% of those eligible signed up to a Medicare Advantage program this year, double from just 10 years ago, and is expected to rise further to over 60% by the end of the decade, with fewer and fewer people going into that traditional Medicare plan paid for by the government. Not only are the premiums lower for Medicare Advantage plans, but they also offer other benefits not in that traditional Medicare, like dental, vision, and hearing. Advantage plans also have a cap on annual out-of-pocket expenses for patients, while traditional Medicare does not. Now, that might sound like a commercial for Medicare Advantage. I assure you it's not. I'm not being sponsored here by anybody, but we're getting to a change in that program that could mean big returns for these 5 stocks. That's because the Center for Medicare and Medicaid Services manages the budget for Medicare as well as sets policy for these Advantage plans. It is a massive budget of almost $1.5 trillion a year, including that $850 billion just for Medicare. So right here in the CMS, we're talking about 1 in every $4 the government spends. And unfortunately, that sets it up for all the worst problems in a bureaucracy, with the last 4 years seeing serious cuts and restrictions. According to the Government Accountability Office, improper payments in Medicare have topped $100 billion last year alone. The Biden administration has cut payments to Medicare Advantage insurers, trying to force people back into that traditional Medicare by pushing Advantage plan premiums higher. The administration even acted to limit how those insurance companies could market their Advantage plans, basically limiting how many people could see those ads and sign up. That's punished the companies managing these plans. These 5 largest Advantage insurers have seen their stock prices fall an average 12% over the last 3 years, with one losing 45%, mostly in the last year alone as those restrictions really build up. And that could be about to change, though, with the incoming administration. President-elect Trump campaigned on growing membership to Medicare Advantage as a way to cut costs in the government healthcare programs. He's also nominated Dr. Mehmet Oz to run the CMS. During COVID, Oz co-authored an article in Forbes that pushing for a universal insurance he called Medicare Advantage for All that would have put all Americans not on Medicaid into these private Advantage plans. He's also been a cheerleader for Medicare Advantage on his daytime show, and an archived page from his Senate campaign promises to dismantle policies that lead to more expensive prescription drugs and expanded access to private sector plans. Heading up the CMS, he's also likely to allow more marketing for these Advantage plans. The Biden administration saw a crackdown against marketing, rejecting a third of proposed ads by Medicare Advantage insurers. So you can see here where big changes are coming for the companies that manage these plans, and it hasn't been reflected in the share prices yet. While there are 43 companies that offer Advantage plans, most people only have access to a smaller group, and the top 7 companies account for 84% of all insurance enrollment. Not all of these are investable stocks, but these are the companies that will benefit the most when those changes are made, and 5 of these could see a 20% run and higher to analyst price targets. And first up, United Healthcare Group, ticker UNH, is by far the largest among those top 5 stocks, though not necessarily the one with the biggest upside potential. Shares are up 72% since I highlighted this company in January 2021 on its announcement to acquire Change Healthcare. Now, that deal was initially blocked by the government, but then allowed by the courts, and I argued, much like the government was saying, that it could give UNH a very strong, if not monopoly advantage in the health insurance industry. UNH offers Medicare Advantage plans in 87% of all counties, second only to Humana in its market penetration, and has 29% of all plan enrollees, more than 10% above its next largest competitor. United Healthcare is expanding its coverage, launching 140 new plans in 2025 and doubling its special needs footprint while using its size to expand the provider network to more than 1 million providers. Now, that larger provider network will not only help lower costs, but also limit the biggest complaint for Medicare Advantage programs, that services can only be used at an in-network provider. Now, UNH brought on more than 450,000 new enrollees last year, the third highest, but only a 5% increase, where others like Humana and CVS grew their enrollment more. So while the company definitely has the upside on changes to Medicare Advantage, as well as the ongoing upside from that acquisition, it may be less than some of the other names on this list. United Healthcare does show one of the more consistent and higher growth rates of the group at 8% revenue growth expected this year and next, along with 9% annualized earnings growth. So while this isn't my top pick, it is a very close second. Shares here jumped 6% the day after the election, showing that the market isn't totally unaware of the potential here, but they're now back to that pre-election price. Analysts have an average price target of $643 a share, about a 17% upside from here. But after years of underperforming and that weak advantage environment, I think analysts are behind the curve on this one, and there is more upside than that target would suggest. CVS Health, ticker CVS, saw its shares jump 14% post-election, its largest gain in 24 years. But again, doubt and that uncertainty have taken that price back lower. While this one has a smaller part of the Medicare Advantage market, just 12% of enrollees through its Aetna Insurance acquisition, the company has been the most aggressive at growing its MA business over the last year, increasing enrollment by 758,000 people, or 22% above last year's numbers. Now, that increase in exposure could come at exactly the right time as the market turns around, along with other changes to healthcare that could boost CVS's retail pharmacy segment. CVS also expanded coverage for its 2025 plans and is working to lower costs with $0 premiums and $0 copays on Tier 1 prescriptions and primary care services. It's also targeting Medicare Part D members that might switch to an Advantage plan with its SmartFit program. So again, aggressively trying to grow enrollment. The market expects CVS to post low single-digit growth, around 4% this year and next, with earnings still under pressure from that retail side of the store. Those low expectations could set the stock up for a surprise upside, and it's one of the cheapest in terms of valuation, trading at just 14 times on a price-to-earnings basis and just 0.19 times sales. And what you have to watch here, though, is the company's debt, more than $82 billion, so it needs these changes fast. Analysts have an average target of $67 a share, about 22% higher from here, but some of that as high as $80 each, and we could get a lot of that return early on any rumors to changes in Medicare. We're just getting started, but if you ever wondered what's in my portfolio or want to see the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. The app was created for investors and by investors. I just started using it last year and love the app for getting ideas and sharing my own portfolio. This is more than just another investing app. You can connect your brokerage account or just input your portfolio manually to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yields across the entire group. You'll also be able to join more than 200,000 investors in the social feed to see what everyone is talking about. I've shared my portfolio on the app, and it's totally free to download, so look for that special invite link I'll leave in the description below. Back to our list though, and Centene, ticker CNC, had the smallest uptick after the election. With only 3% of the Medicare Advantage market, it's got the smallest upside to this theme. This is still a strong pick on valuation though, and the company just finished a $22 million upgrade to its Find a Provider tool to make those user services easier, as well as providing access to Twill by Dario platform for mental health services. Growth here is similar to CVS, with expectations for around 3 to 4% on revenue, though earnings are expected higher. Valuation is even lower here at just 10 times PE and that same 0.19 times price to sales, but not the same debt danger, so this one is a good value play, even though it won't benefit much from that Advantage plan. And here the average analyst target is for 37% upside, with a unanimous consensus for higher prices, and one as high as 61% higher, so this one might not get that Medicare Advantage bump, but is still worth checking out. Cigna, ticker CI, is also a smaller player in the Advantage plan space with just 2% of the market, though it has grown that exposure over the last year versus Centene, which has seen its exposure fall. Cigna had very strong growth of 25% in revenue this year, but is expected to slow down to that industry rate this year, though earnings are expected to continue rising. It is not cheap though compared to these others at a price of 30 times those earnings and 0.4 times sales. Analyst targets here are for around 25% return, with even the lowest estimate a 14% return on these shares. We've still got that biggest beneficiary to highlight. The stock I just bought $85,000 worth of shares, but Nation, as insurance companies, even on the upside surprise I'm expecting, these are not the kind of stocks that are gonna make you rich. We could easily see 20 or 40% returns over the next year, and these are safer picks, but for those triple-digit returns, check out this video and the stocks Google is buying. 7 stocks Alphabet has invested almost $2 billion, and you need to be watching. My pick for the highest upside in the theme is Humana Inc., ticker HUM, up 12% on the election news alone, and one of the few to trade higher still. Humana is the second largest provider, with 18% of the Medicare Advantage market, and booked strong growth of 472,000 enrollees over the last year. That is an increase of about 8.5%. Humana offers Advantage plans in 89% of the counties across the country, more than any other provider, and is adding benefits to its 2025 plans like music therapy and dual-eligible special needs plans. Prescription drug coverage is also changing for its 2025 enrollment, with $0 copay for Tier 1 and Tier 2 drugs through its mail-order pharmacies. The company reported solid growth this year, but is expected to do nothing next with just 1.6% sales, though earnings are expected to continue to rebound. It's neither the cheapest nor the most expensive here, trading at 24 times earnings and 0.3 times sales. Down 43%, shares are the second worst performing in the healthcare space, which has been the worst performing sector this year. And in fact, Humana is the 5th worst stock in the S&P 500 over that period. And for the reason that it's underperformed so long, I think even the analyst community is going to be caught surprised on this one, with a target of just $285 per share. Shares reached $535 each last year, so even that high target of $374 a share would still be well below where it's been. Now on this, I bought 300 shares at just over $283 each for an $85,000 investment. And with all these stocks, the potential is there for those big jumps in the first quarter of the year on any news of changes at the CMS or on those Medicare Advantage policies. Join me on the Blossom Investing app and see all the stocks in my portfolio with the invite link in the description below. Or click on the video to the right to see the stocks Google is buying, the ones that you need to be watching. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.